back up, but it's really the guidance that's what's
guidance
good.
is good. 60 cents a share was 8 cents above estimates. Revenue also grew and beat estimates. $161.5 billion. Yep, that's a quarter. Also beating estimates. U.S. comp store sales grew 3.8%, and analysts were looking for 3.5%. The retail giant is issuing guidance for the second quarter. Net sales growth expected in the range of 3.5% to 4.5%. For the full fiscal year, the company now expects to be at the high end or slightly above its previous guidance for net sales growth and operating income growth. Melissa Repko joins us now with more. She's on set. She has some commentary from Walmart's CFO as well. Hey, Melissa.
Hey, great to see you. I spoke to John David Rainey, the CFO of Walmart, and he said that while inflation is still a factor, what's really driving Walmart's performance is gains with a lot of shoppers that are of higher incomes. And he's also seeing that a lot of people are buying online through their third-party marketplace. So he said this is coming from growth in units and trips to the store and website, not from inflation.
Is that going to be taking away share from Amazon, or is Amazon just growing so fast that that's not what we're talking about?
That's a good question. And it's worth noting that one of the drivers of Walmart's performance this time around was its newer businesses like advertising. He told me 1/3 of their improvement in operating income this quarter came from newer businesses like their membership program, their advertising, their fulfillment services from their marketplace. And that's straight out of that's straight out of Amazon's playbook.
Right.
Are any sign from Walmart about overall the low-end consumer? We keep waiting to see stress, but if you're going to go anywhere as a low-end consumer, it might be Walmart. So
I asked him specifically about the low-income consumer, and he said, the low-income consumer is still hanging in there. And while he said the pattern has held that people are buying fewer things like home goods and electronics, they are still sticking with Walmart, and Walmart's also benefited from having things like delivery. For the first time, he said delivery actually surpassed store pickup. And he said, we've got customers that are coming to us more frequently than they have before, and newer customers that we haven't traditionally had. And one of the things, interestingly, he mentioned is he said the gap between food at home, so cooking your own food, versus going out to dinner has grown. And he thinks that is benefiting their grocery business and causing people to come to them rather than maybe going to some of the names we heard from last week.
Is there an explanation for how they're capturing this sort of higher-end customer?
They are really adding those services that Amazon has been known for. So that's speedier delivery, express delivery to people's homes, and then the wider assortment through the marketplace has allowed them to add things like Dyson products or some of those higher-end brands.
New high all-time. I guess we shouldn't be surprised. Dow's at, a lot of the averages are at all-time highs, closing in on $500 billion. Walmart is really quite a company. How about competition? E-commerce competition with Amazon?
We'll have to see how it plays out, but e-commerce in the U.S. was up 22%, and that was something he pointed out. But one of the other factors that Walmart is being watched for is a couple days ago they announced that they will be moving a lot of people to Bentonville and to offices, and as the nation's largest private employer, they are signaling that they're moving away from remote work and back to the office. So it's interesting to see what that will mean for other employers as well.
The rest of the country.